Let's
Okay.
go on to Rebecca San Juan for story number 3. Rebecca, this is a story you wrote. It appeared in the Miami Herald. I'm going to read you the headline. I'll read you the first couple graphs, and I want you to give some insight. You wrote the story, so you might not be able to provide an opinion, but you can definitely give us some insight as to what you learned or what you, what your reporting uncovered. So here we go. I'll read you the headline. I'll read you the first couple graphs. Headline: Housing market continues cool down in Miami-Dade County as prices fall third straight month. Here we go. First couple graphs, Rebecca. Then I want you to comment. Home prices in Miami-Dade County fell for the third month in a row in September, giving a breathing room to aspiring buyers on tight budgets who have waited months on the sideline. Median sales price dropped last month to $600,000 for single-family houses and $415,000 for condominiums, from $620,000 and $416,000 respectively in August, according to the latest monthly housing report released from the Miami Association of Realtors. Existing home prices have been retreating in Miami-Dade County from an all-time high in July, where the single-family house price was $631,700 rounded for houses and about $420,000 for condos. In addition to buyers dealing with higher interest rates on mortgages, the monthly price deflation in Miami-Dade County could be the result of the lower end of the housing market, attracting the most attention from buyers, said Maria Letton, a business professor at Florida State University. And here's a quote from the professor, Rebecca, that I want you to comment. The professor says the jury is still out. Summer historically has been not the hottest time in the market. If this trend continues in the cooler months, then we might have a trend here. Rebecca, what's going on? Is this an anomaly that we're seeing a pullback? Maybe people are out traveling. Maybe they're out in Europe. They're having a great time. They're traveling around the world and real estate isn't top notch. They want to see how the interest rate are going to play out with the Federal Reserve. Or is this the beginning of a trend that we're seeing? What did your sources tell you in reporting this story?
Great question. What's the consensus? Everyone agrees that the market, South Florida market, is going back to seasonality. What does that mean? The summer is historically for here one of the lowest sales times for the real estate market. Although technically, side note, I have experts that say it's really January and February, but summer is one of the lowest seasons. And everyone says that the time that we saw during the pandemic, where it was a buying frenzy, there was so much activity. And in fact, which surprised me, too much activity for a lot of brokers, right? Lines out the door, price war bids. It was absolute chaos. That's gone with. And so now we're seeing the market going back to the pattern that we saw before the pandemic. However, here's the thing that's funny. You asked, are we going to see the market decline, right? We're seeing this month to month activity. It's important to note we haven't seen a year to year decline yet. It's so funny because when we saw the first decline 3 months ago, I remember asking, is this a sign that things are going to go south?
Yes.
And one expert, I'll never forget, he says, well, 3 makes a trend, which I think everyone on this call can agree. Well, it's the third month in a row that everyone sees the data and knows, okay, we're seeing a decline. But you have professors, academics that are saying, like Maria Letton of Florida State University, well, it's too soon to tell. And then, of course, which is not surprising, you have the brokerage community. I interviewed Melissa Hoff of Compass that say, well, nationwide things are going to go south, but Miami is going to remain strong. So it's so funny. What surprised me with this story was the optimism in this for this market.
Interesting. Rebecca, just a follow-up question from your reporting. Interest rates in 2021, ballpark mortgage rates were about 3%. 2022, they were about 5%. Now they're hovering somewhere in that ballpark, 8% or so. When you were talking to the agents or any of the people you quoted in this story, anybody bring up interest rates, or was it more so about how everybody wants to live in South Florida? New Yorkers have come, Airbnb possibilities, things like that. So were interest rates even a factor, or could that actually be the reason why we're seeing a pullback?
So here's the thing. I did ask about interest rates. Definitely the brokerage community credits that for part of the slowdown here in South Florida. But the fact that they're remaining steady, and we know what the Fed is doing, like they, at the time of reporting this out, there was some concern. Well, will they increase? Will they not increase? Now we know that they're not going to increase, that they're going to remain steady, at least for now. That said, the brokerage community, and even I believe I spoke to Maria Lecton about this, the consensus was any stability is actually good for the market and will actually draw back some activity, likely because people know where they stand. They don't, there's still that fear about whether interest rates are going to go up. And if they keep on going up, then that reduces buying power. And so the fact that they're steady for now will likely be a good positive for the market. That's what I learned.
Interesting. Jean, do you have any opinion just about maybe what the stats are showing? You've been somebody on our podcast who's constantly been talking about how the market is frozen. A lot of, buyers and sellers, nobody's kind of bridging the gap and coming together to do a deal. What do you sort of make of this? How critical are interest rates? And more importantly, how critical is insurance given the huge spike in the insurance crisis, some would say, where they were currently dealing with down here in South Florida as well as the state of Florida?
Yeah, I mean, as far as interest rates, I mean, traditionally Florida has had a greater proportion of cash buyers. So interest rates, while they're rising and perhaps impacting some buyers, since a lot of buyers come here from overseas, they pay cash for properties. It's less of an issue. Now, the uncertainties surrounding insurance and all kinds of new HOA laws, which we'll be talking about, and requirements to fund reserves and things like that. I think that those are rising taxes, of course. Those are all things that could put the brakes on the housing market too. I think there's just a lot of uncertainty, and that's keeping a lot of people on the sidelines. Sellers, they don't want to lower their prices, of course. They think they've got a lottery ticket, in their hands. And perhaps they finance their purchase with a 3% mortgage. Where are they going to go now? If they sell, they're going to have to, they're going to buy something with an 8% mortgage. I don't think so. They're sticking around. And of course, buyers, now their housing costs, their financing costs have essentially doubled. So they're not going to pay the high prices. So I get the sense that the market is frozen, and the numbers kind of bear that out. I mean, we're not seeing a whole lot of transactions, relatively speaking. And so a lot of those sales have been, were pulled forward during the pandemic. Like Rebecca said, there was just a frenzy of activity. And I think it brought a lot of sales that might have happened over a number of years. It brought them all bunched up into the pandemic years. And now sort of there's a bit of the settling down of activity.